The market is in total panic. Everything's going crazy. Rates are on the rise. And just a week ago, they were tumbling all the way down to record lows. What the heck is going on? How does it impact you as a home buyer and a real estate agent? I'm going to hopefully answer that in about the next 90 seconds. First thing you need to understand with mortgage rates, it is not the 10-year treasury that you want to look at. And most loan officers like to say, hey, we look at the 10-year, the 10-year, the 10-year. That's great. The reason they say that is because it usually mirrors what's happening in what's called the mortgage-backed securities, or the MBS. The mortgage-backed securities, that is where you are actually pricing your loans from. That's where you get your rates from, is the MBS market, not the 10-year. Now, the 10-year and the MBS, they usually mirror each other, so a lot of people look at that. But here's a problem. They've parted ways, so to speak. They've gone their own separate ways. And when that happens, you don't really, it doesn't make any sense. And you have the stock market coming down quickly. And then you say, okay, well, bonds should be getting better, right? Well, they're not. And you look at it and say, well, why? Well, because people are in a total panic. And when they're in a panic, they run away from everything. Fight or flight, they are flying away. They're not putting money into anything. They're freaking out. So rates, naturally, there's a lot of uncertainties going on. Rates are getting worse. So then you look at it and say, well, what are the other factors that are playing into this? And one of those factors is going to be the value of that loan, or the servicing of that loan, the mortgage servicing rights of that loan. What is that worth to an investor? Well, it's hard to tell. And if there's uncertainty on the servicing value, well, then it's going to be, it's uncertain. They have to price a little bit higher. So now you have the 10-year going this way and the MBS going this way, and servicing values out of whack, uncertain. And then you have your hedge costs. What about the hedge costs? Well, there's a lot of volatility, and there's a ton of it right now. Hedge costs are high. So now you got high cost, you got uncertainties with your servicing, and the deviation between the 10-year and the mortgage-backed security and the stock market coming down, everything is a little bit crazy. So we look at that and we say, well, what's going to happen? Well, glad you asked. What's going to happen most likely is ride it out, right? Oh, you don't have a choice. You got to ride it out, but don't panic. Don't freak out. Things have a tendency to work themselves out. It'll stabilize. Give yourself a month, maybe 2 weeks, something like that, and let it stabilize itself. Let it come back to normal. And what you may see the bond market and the mortgage-backed securities, you may actually see rates coming back down, even though it seems like they're trending up, but rates coming back down, because you're going to have more security, less volatility in the market, and things are going to come back together, and your trend lines are going to make sense again. All of that together, just ride it out. Let's see what happens over the next 2 weeks or so. Because like I say, a week ago, rates were at a record low, and now all of a sudden they are, they're abnormally high. So hopefully that helps you understand where we're at, the volatility of where we're at right now today. Let's ride this thing out for a couple of weeks, see where it lands us. Give me a call if I can answer any questions. It's Tim Chase at 719 Lending.